Good afternoon. This is Steve Landis with Home Point Financial. I'm responsible for the correspondent lending channel here at the company. And I got a note from Phil the other day, and he says, hey, we should do a little shoot and talk about the difference for all the different channels that we serve when it comes to third-party business. So I thought, great opportunity, get together and do a quick shoot and talk about those differences and what we offer to our clients. So we have the broker channel, which are brokers that are originating loans and selling them to Home Point. They want us to underwrite for them. They want us to disclose their loans, and they want to grow with us over time. And so we offer an opportunity for them to be non-delegated. And by definition, what that means is they've grown up a little bit. They've gotten a warehouse line of credit to where they can fund their own loans, but they still want us to do the underwriting for them, and they still want us to make credit decisions. But they're going to disclose, and they're going to use a line of credit, in essence, in order to close these loans and then still sell them to Home Point. And then we have what we call our correspondent channel, which deals with customers that are now ready to take another step from being a non-delegated customer up to being what we call a delegated client. And a delegated client means we've delegated them the authority to underwrite their own loans. And so they hire loan officers, former brokers, people from other competitors in their markets, and they go out and they have them originate loans. They underwrite them within guidelines that we've provided to them, and then they send them to Home Point, and we agree to or disagree to buy those loans based on their ability to fit within the credit criteria that we've given them. Now, in order to do that, they have to have a high net worth, as much as $1 million, a minimum of $1 million or greater, because they're taking on more risk. And we get the choice of either buying that loan or not buying that loan. Some of those delegated customers actually do business with brokers. Some of the same brokers that either may be dealing directly with us and also through them, and the loan may get to Home Point through either of those channels. And so it's kind of what I would call the supply chain, the food chain of origination, and it can come full circle like it did in that example. We call that fourth party origination. So it's important that we service all of these customers because they not only grow up the scale and up the scale and up the chain, sometimes they go back down. So we're in a little bit of a tougher market right now, where some people are making the decision perhaps they don't want to underwrite loans and they would prefer to not have to keep $1 million net worth, or they would prefer to give up their warehouse lines of credit, or in a bad situation maybe lose their warehouse lines of credit. And there it makes more sense for them to scale back down, become a little bit smaller, become a non-delegated client again, or in the case of losing a warehouse line, go back to being a broker. And so when we look at what we want to offer to third-party originators across the country, and our desire to scale and grow servicing and collect and buy more loans and fund more loans on behalf of the business, we want to be able to deal with all channels. And it's important to us that we can help a customer through the entire life cycle of what they want to be. And so I hope that's a little clearer and maybe a little better understanding of what it means to do business with Home Point in any channel, and why it's important that we maintain lines of communication with our customers and give them the tools to do business with us in the manner in which they want to do business. That's what's most important. So thanks for listening today.